Reason number one that Volpocalypse won't happen again, the underlying indexes themselves have been improved. This is the SPVIX STR index. This is the index that the VXX, the longest running volatility product, is actually tracking. There's been many improvements to these underlying indexes since Volpocalypse. The daily rebalancing window has been expanded. The trade at settlement market can be used now to relieve some of that end of day pressure. The bid-ask spreads have widened. There's been several things done since then to make sure that the underlying indexes are essentially fixed. The volatility ETP space is now just a fraction of its former self. Back in February 2018, that was the height of the short volatility trade. You remember we were coming off 2017, which was one of the lowest volatility years in history. Everybody and their dog was shorting volatility at that time. There was over $5 billion in notional value going through all of the volatility ETPs. And this is a liquidity problem because they're buying VIX futures in a VIX futures market that is not big enough to sustain that pressure. Well, these days, the volatility ETPs are just a fraction of their former self, and the VIX futures are still growing. The new ETFs launched, SVIX and UVIX, they track different underlying indexes. So you've got the old guard, the VXX, UVXY, SVXY. They still use the original indexes, and remember, those have been fixed. And then the new SVIX and UVIX, they're actually based on the short vol and long vol indexes, which, to be honest, are even better than the old original ones. So we've got an expanded distribution of products using different rebalancing rules, different time frames, and it just makes the market in general a lot safer. Due to the Volpocalypse event in 2018, the SVXY and the UVXY were both deleveraged to have lower risk. The original SVXY was a -1 times leverage product, just like the old terminated XIV was. Now, it suffered massive losses that day as well for the same reasons, but it didn't get delisted. Instead, they took the leverage factor from -1 times down to -0.5 times, basically cutting it in half. The old UVXY was a 2 times leverage product back then, but after Volpocalypse, it was also deleveraged from 2 times down to just 1.5 times. This action of deleveraging two of the more popular products, it does mean that the overall pressure on the VIX futures market is much less these days.